Hello everyone, welcome to my class. Myself Vijay Lakshmi, lecturer in commerce from Telangana Tribal Welfare Residential Degree College for Women, Medak. Let us start our lecture on consignment account. So what is the need of the consignment? Due to increasing in the size of the market, it is quite obvious that the manufacturers or wholesalers cannot approach directly to the customers. They appoint the various agents to promote their sales. On the basis of commission, they may get the commission because the producers produce the commodities, they cannot direct contact with the customers either in the local market or in the foreign market also. So for that reason, they may appoint the various agents. Either the producers or the wholesalers appoint the various agents to promote their sales. Agents, they may get the commission for selling of the goods. This complete agreement is denoted as consignment. What is the meaning of consignment? In the simple sense, the consignment means sending. It means consignment is a sending the goods from one person to the another person or the firm for the selling them on behalf of the former. It is a process under which the owner consigns or hand over his material to his agent, salesman for the purpose of shipping, transfer, sales, etc. Here, two parties are involved in the consignment process. One party is called as owner and other party is called as agent. On behalf of the owner, agent may sell the goods. That complete process is denoted as consignment. So, what is the consignment? So, if you are seeing this picture, the consignment, he is the owner of the good and he is the agent. Owner sent the goods for the purpose of sale and the person of the owner is known as consignor. Agent is known as consignee. Consignee sells the goods. He receives the commission from the consignor, or we can call it as owner. So in the consignment process, the consignor is not linked directly with the customer. He is interacting with the agent. That person is known as consignee. Consignee is interacting with the customer to promote the sales. Means he received the goods from the consignee and sell the goods to the customers. This complete process is known as consignment. In this process, two parties are involved in the consignment process. One party is known as consignor and the other party is known as consignee. Who is the consignor? Consignor is the principal, or we can call as owner of the good. He is the producer or the firm who sends the goods to an agent for sale. He enjoys the ownership, possession of the ownership until they sold by the agent. So, he is not directly sell the goods to the customers. For the purpose of the increasing of the sales, he may appoint the various agents. Like he may appoint the agent in the Delhi, he may appoint in the agent in the Hyderabad, he may appoint the agent in the Bangalore to promote his sales. He is called as owner. So consignee is a agent. On behalf of the owner, he may promote the sales. For that purpose, he is get the additional remuneration that in the form of commission. So because he know about the market conditions, so he may promote easily, they can promote the sales. So let us understand what is the major difference between the consignment and the sales. Because in the consignment also both the parties are involved, like consignor and consignee. But whereas in the sales, the parties are involved in the sales process, the parties are called as seller and the buyer. The relationship between the both the parties in the consignment is called as principal and the agent, because principal is the owner of the good and agent is a selling the goods on behalf of the owner. He receives the commission by promoting of the goods. That is what we can call as consignment. But whereas in the sales, the seller direct contact with the customers, he sold the goods to the customers. The relationship between the seller and the buyer is called as debtor and creditor relationship. And the third difference is return of goods. Consignee has the right the goods in case he is not sell the goods. Let's say example, suppose in the consignment process 100 kgs he sent the goods, but unfortunately he sold only 80 kgs. The 20 kgs is left over, he is sending again. That possibility is taking place in the consignment, because he is only the agent, he is not the owner. So whatever the goods is left over with him, that goods again is sending to the owner only along with the account sales. In the sales, whatever we purchased, we cannot return the goods. The buyer cannot return the goods to the seller, because once if we use the commodities, once we purchase the goods, we cannot return the goods unless until it is damaged piece. The fourth difference, after delivery expenses. In the consignment process, after delivery expenses are burned by the consignor, those paid by the consignor. Let's say consignor is sending the goods. At that time, consignee incurred few expenses in the form of recurring and non-recurring expenses. That expenses is paid by the consignor only. But whereas in the sales process, after delivery of the goods, buyer will bear the charges. Buyer will incur the expenses. The seller cannot pay the certain amount. And next difference is return or reward. In the consignment process, as we discussed that the consignment is transferring the goods from the owner to the agent. Agent promote more sales, he may get the more commission. So that is when we can call as based on the commission purpose, agent may concentrate to increase the more sales. Whereas in the sales process, the seller only concentrate on the profit. If he is sell more goods, ultimately he may get the profit. But no seller cannot transfer the profit to the buyer, because always from the point of the seller, he is concentrate to increase more and more sales without interrupting, means customer satisfaction is required, and ultimately they need to promote their sales and getting the huge benefits. From that benefits they cannot share to the buyer. But whereas here the opposite party also getting the benefit in the form of consignee is an agent, he is getting the commission also. And the next difference is called as transfer of risk. So ultimately in the consignment process, in this case the transfer of risk ultimately in the hands of the consignor only. because he is the owner of the good. The complete risk is bear by the owner only, the consignor. Whereas in the sales, the seller is transferring the risk along with the goods to the buyer. So the risk in the hands of the buyer, not in the seller hands. Let us discuss a few terms which we are used in the consignment process. As we had discussed, the consignment is the exchange of goods from one person to the another person. For promoting of the sales, they may get the commission. So these types of commissions are mainly classified into three categories. So the commission is the remuneration which is paid by the consignor to the consignor for the services rendered to the former for selling the consigned goods. As we know that consignor is the owner of the good, consignee is the agent of the good. So agent is selling the goods for that purpose he is getting the remuneration in the form of commission. So there are three types of commissions can be provided by the consignor to the consignee as per the agreement. Number one commission is called as ordinary commission. So this ordinary commission is paid on the fixed percentage on the sales. Let's say the gross sales 50,000 rupees is there, already the commission is 10%. So the consignee may receive 5,000 rupees in the form of commission. That type of commission is called as ordinary commission. In this ordinary commission, the consignor only the responsible for any bad debts, irrecoverable debts. The consignee is not responsible because he is only concentrating about promoting of sales, whether it may be the cash sales or it may be the credit sales. There is a risk factor which is taking place in this ordinary commission, because for getting of huge commission, ultimately agent may promote more sales on credit basis also. At that time, the bad debts also occurs. That whole risk is bear by the consignor only. This is regarding the first commission is called as ordinary commission. The second one, del credere commission. So what is the del credere commission? To increase the sales and encourage the consignee to make the credit sales. Because all the customers immediately they may not pay the cash. So to encourage the credit sales, but the risk also paid by the consignee, ultimately is taking proper precautions while promoting the goods, while selling the goods. So whatever the del credere commission is the additional commission which is providing to the consignee for recovering of the bad debts from the customers. If any credit sales occurs, if any bad debts is taking place, the consignee is the whole and sole responsible for recovering of such type of the debts. This is regarding the del credere commission. And third type of the commission is called as overriding commission. Overriding means extra commission is allowed by the consignor to the consignee to promote the sales at higher price than the specified, or to encourage the consignee to doing his artwork. Let's say the example, the consignor in the consignment process, they may send the goods at the rate of 100, but they sold the goods 300 rupees at the rate of 300. So ultimately for higher prices he is promoting the goods, they may get the extra commission on the extra efforts which is made. That type of commission we can denote it as overriding commission. So this is the commission is calculated on total sales or on the difference between the actual sales and sales at invoice price. As we know that invoice price is different and cost price is different. Cost price is the actual price on the goods. Let's say 100 rupees is the cost price. Invoice price is 200 rupees. So these two prices they have to compare. That we can calculating in the overriding commission. So overriding commission at the time of new products they are launching in the market, at that time they may give the overriding commission. The next term commonly we are used, that is called as pro forma invoice. As we know that the consignment is start with sending of goods from the consigner to the consignee. Along with the goods, consigner send pro forma invoice to the consignee. Pro forma invoice includes quantity, quality of the goods, what is the weight, and marking, packing, etc. All the details which is including in the pro forma invoice. So these pro forma invoice along with the goods the consignor sent to the consignee. The next one is called as advance on consignment. Who give the advance? Because as an owner he is sending the goods to the consignee. For the purpose of this surety, before he promoting the goods, before he is selling the goods, in the consignment process, they may give certain check, consignee give a check or bill to the consigner in the form of advance. That is basically we have to consider for the surety basis, the owner may take the check from the agent. This is called as advance on consignment. The next one, account sales. So the consigner sending the goods along with the pro forma invoice to the consignee. So the consignee on advance basis he may provide the check to the owner for the surety basis or security reasons. Then after promoting the sales, like consignee receiving the goods and he sell the goods to the customers, and he may prepare the statement after selling the goods. So the account sales is the statement which is given by the consignee to the consigner after selling the goods. It is containing the details regarding the quantity, how much quantity they sold, and what is the selling price, at what rate they sold the goods, expenses incurred by the consignee, and what is the commission he is expecting, and if any advances is paid already, that amount they deducted and given in the document form. That document is called as account sales. Let us see the format of account sales. This is called as specimen copy of account sales. Account sales includes, as we discussed, sales. From the sales we need to deduct the expenses incurred by the consignee, and if any commission like fixed remuneration already received by the consignee, that amount also they need to deduct, and if any advance is paid to the consigner, that amount also they need to deduct it, and finally he need to make the settlement to the owner. So in this specimen, account sales of 100 tables from sold by Suresh and Company of Delhi for the account and risk of Arjun Private Limited, Bombay. So there are two parties are there. One party is called as Suresh and Co, and other party is called as Arjun. Arjun is a consigner, Suresh is a consignee. Consignee is selling the goods, means Suresh Delhi is selling the goods. The owner is in Bombay and agent is in Delhi. On behalf of the owner, agent promoting the sales. After promoting the sales, he is preparing one document is called as account sales. So as we are seeing in this picture, gross sales from sales, gross proceeds from sales, 100 tables at the rate of 300. So the total value is 30,000 rupees. 30,000 rupees he promoted the sales. From that we need to deduct certain expenses which is incurred by the consignee in the form of freight and cartage 300, insurance 150, warehouse 300. These are the expenses which is incurred in the form of recurring and non-recurring expenses which is incurred by the consignee, and commission he is getting 5% on total sales. Total sales he is promoted 30,000 rupees. The fixed commission is 5%. So the commission is 30,000 into 5%, that is 15,000 rupees is the commission which we are getting here, and the total value is 2,250 is along with the expenses including in the commission. 1,500 is the commission and the rest of the value is expenses. So from the total sales, if we deduct these expenses, we may get the value is called as net proceeds. That is related to net proceeds. And advance already he paid. Advance he is already paid 11,000. 11,000 rupees is a advance for the surety basis. So from the 27,750, if we deduct the advances, the balance we need to make the settlement to the owner, that is 16,750. This is what we can call as account sales specimen copy. So if you are observing in the specimen copy, here at the end right side, the consignee name is included, that is Suresh and Company of Delhi. He is a consignee, and Arjun is a consignor. So E and OE, that is errors and omissions expected. This is the specimen copy of account sale. Let's see the procedure of the consignment. So this is the procedure of the consignment, where he is the principal, means the owner of the goods. He sent the goods in the first step, and he is the agent. He receives the goods from the owner, and ultimately this is for the purpose of this sending the goods. And in the second step, consignee sold the goods to the buyers. So here the principal, or we can call it as consignor, is not linked with the buyers. Who are selling the goods here? Consignee is selling the goods to the buyer after receiving the goods from the owner. Then for sale the goods, he may get the sales proceeds in the form of cash. He is getting that cash, he is remitted to the owner. He remits the owner, the consignor give the commission. This complete process is known as consignment process. In this party, two parties including, one is consignor and consignee, and consignee selling the goods to the buyers. Next one, what are the expenses incurred in the consignment process? So both the parties incur the expenses, like consignor and consignee incur the expenses for dispatching and selling the goods. These expenses are called as non-recurring expenses and recurring expenses. What is the non-recurring expenses? Non-recurring expenses are incurred for bringing the goods from the place of consignor to the place of consignee. Especially the non-recurring expenses is known as direct expenses. So these types of expenses incurred in the process of consignment process, all the expenses which is incurred by the consignee in the nature of non-recurring expenses only. Whereas the consignee incurred the expenses, either that may be the recurring expense or non-recurring expenses. It is these expenses incurred once on a particular consignment period. At one time, these types of expenses is incurred. It will increase the value of goods. The expenses are paid by the consignor or by the consignee on behalf of the consignor only. So ultimately this is regarding the non-recurring expenses. So it is incurred at once only. The next one, recurring expenses. Recurring expenses are the expenses which is incurred after the goods have been received at consignee's godown. So such type of expenses we can call as recurring expenses. Again and again these types of expenses incurred, like insurance, godown rent, etc. So this is regarding the non-recurring and recurring expenses. Let us understand with this picture. So this is regarding the consignor expenses. In the consignor expenses, loading, freight, insurance in transit, etc. These all the expenses are consignor's expenses. As we discussed, whatever the expenses which is incurred by the consignor, it is called as non-recurring expenses. Whereas if you are look at the picture, here Mr. Vivek is a consignor, Mr. Amit is a consignee. He is the owner of the good, he is the agent. So he sends the goods. At the time of sending the goods, so ultimately consignor is incurred the expenses in the form of loading, freight charges, insurance in transit, etc. In the same way, the consignee is also incurred the expenses in the form of unloading, customs duty, carriage inwards, transportation, etc. These all things, this one consignor expenses and consignee expenses is the nature of non-recurring nature. And the next one, the expenses which is in the premises of the consignee incurred, that type of the expenses is called as recurring expenses. Like say the godown rent, insurance premium is paid, office and admin expenses, these all the expenses is called as recurring nature. And selling and distribution expenses, to promote the sales, so he is selling the goods to the buyers, ultimately the selling and distribution expenses also incurred. So this type of expenses is known as recurring nature. So recurring nature means at the time of sell the goods, again and again these expenses is incurred. So these are the two types of the expenses, recurring and non-recurring expenses, which is including in the consignment process. And let's understand, in the consignment process we have the losses also. The losses, we are sending the goods from the consignor to the consignee. They may suffer the two losses, that is called as consignment losses, normal and abnormal losses. What is the normal loss and what is the abnormal loss? Normal loss means the loss which is occurs due to the nature of goods or type of goods. At the time of basically if you are seeing the picture, loss of coal due to the loading and unloading. If you are loading and unloading, small minor damages which is taking place, that type of the loss we can call as normal loss. If you are taking any precautions also, the loss is common. Such a type of loss is called as normal loss. And the second one is called as abnormal loss. Due to the negligence or carelessness, these types of the losses which is incurred. So if you take the proper precautions, we may control or we may avoid this type of losses. That is called as abnormal loss. These losses are classified into two categories. One is called as loss in transit and second one is called as loss at consignee place. Number one, loss in transit. So it is the one of the type of the loss which is taking place on the way. The goods are on the way from the consignor to the consignee. The loss is occurs which is called as loss in transit. Let's say the example. Goods may be damaged in transit due to accident. If any accident occurs at the time of moving the goods from owner to the agent, like consignor to the consignee, sudden unexpected situation arises, so all goods are damaged. That is called as loss in transit. The second one is called as loss at consignee's place. How the loss is occurs due to the fire accidents. The goods may be destroyed by the fire in the godown. So this type of a loss is called as consignee's loss. The loss is happened in the place of consignee's godown. So this is regarding the abnormal losses. So these are the few terms which we are using in the consignment process. Basically the commission. There are three types of commissions, and as usually we are going through the account sales, pro forma invoice and losses. Now we need to see the accounting treatment. Why we prepare the consignment accounts? As we know that owner is sending the goods to the agent. He know what is the profit or loss he may get with the consignment process. So for that reason they may go for the preparation of the accounts. The accounting treatment in the books of consignor and in the books of consignee is differ. So let us discuss one by one. Number one, goods. The consignment starts with the sending the goods. Goods sent on consignment. In the books of consignor is the owner. The entry is consignment account debtor to goods sent on consignment account. Means for the purpose of consignment we are sending the goods. Consignment account is a nominal account. So ultimately it is affected in the debit side of consignment account. In the case of consignee, in the books of consignee, there is no entry we need to pass, which is goods sent on consignment. And this is regarding the first entry. In the nature of goods sent on consignment, ultimately in the books of consignor, the entry is taking place, whereas in the consignee's book, the no entry is passed. And the second one, for expenses incurred by the consignor. For sending of the goods, ultimately the owner incurred certain expenses. So, cash or bank balance is decreasing for the purpose of consignment. So, the entry is consignment account debtor to bank or cash account in the books of consignor, whereas in the books of consignee no entry is passed. And third one, after sending the goods, consignor along with the goods he may incur certain expenses. After receiving the goods, consignee may give certain advance in the form of check or bill. At that situation, we need to write down the entry bank or bills receivable account debtor to consignee's account. Because if we may receive the check, bank balance is increasing, or if we may receive the bill, that we can in the future also we may receive, that is bills receivable account debtor to consignee account. From our agent we are receiving the goods. This is not affected in the consignment account because this is related to the consignee account. Consignee's personal account only that is affected, not in the goods sent on consignment or in the consignment account. And in the books of consignee, consignee is making a payment. Ultimately bank balance is decreasing, or in the form of bill if he is paying the bills payable account. So he is giving to the consignor. So consignor account data to bank or bills payable account. This is in the books of consignee at the time of advance made by the consignee. This is the third situation. And the fourth one, after receiving this advance, when the consignor gets the bill discounted with the bank. Ultimately, if that is discounted with the bank, there is no entry in the books of consignee, because the consignee is giving the advance. After receiving the advance for the purpose of consignment, consignor is discounted with the bank. So the entry is bank account data, discount account data to bills receivable account. This is in the books of consignor only. There is no entry in the books of consignee. Next one, for the expenses incurred by the consignee. After, as we discussed earlier also, after sending the goods, consignor incurred expenses, and at the time of unloading process, consignee is also incurred expenses. For the purpose of incurring expenses by the consignee, in the books of consignor, we need to write down the entry consignment account data to consignee's account. Because the expenses paid by the consignee only after he need to send the account sales, along with these expenses and commission also he is included in the account sales. In the books of consignee, he need to write down the consignor's account data to bank account, because he paid that expenses, the bank balance is decreasing. So consignor account he required to prepare in the books of consignee. This is regarding the expenses incurred by the consignee. And next one, for the sale made by the consignee. So after unloading process, consignee promote the sales that is sold to the customers. At that time, so the entry is consignee's account data to consignment account. So consignee is selling the goods to the customers. So ultimately, for the purpose of promoting the goods, consignee is as per the consignment account. Consignment is a nominal account. As per the nominal account rule, debit all expenses and losses, credit all incomes and gains. So sales is we need to take in the credit side by consignee's account in the consignment account in the books of consignor. Whereas in the books of consignee, we need to write down the entries bank account data, debtor's account data to consignor's account. Because consignee sell the goods, immediately he may get the cash or bank balance. If he sold the goods on cash basis, immediately he may get the cash, or if any credit sales is there, they need to write down the debtor's account, that we can call as customers. After maybe 15 days or 30 days, he may recover from the customers. If he is getting the delivery commission, all the bad debts are responsible by the consignee, not by the consignor, because he is getting the additional commission for recovering of the bad debts if any credit sales is taking place. And the next one, for the after selling of the goods, Then next one, the consignment process, as we know that agent get the commission if he promotes the goods. He promotes the goods and he sold the goods, he may get the commission. So the entry is consignment account data to consignee's account. The expenses incurred by the consignee and for the commission, the entry is same. So we need to write down either that is expense or commission. Commission always paid based on the sales. Whatever the sales is there, sales is promoted by the consignee based on the fixed percentage, we require to pay the commission. So this is in the case of in the books of consignor. In the books of consignee, entry is consignor's account data to commission account. So as we know, the commission is an income. As per the nominal account, all the incomes must be credited. So consignor's account data to commission account, we need to write down in the consignee's book. And the next one, after sending the goods, for the purpose of he is incurred the expenses, and consignee is also incurred expenses, he may pay the advances, he promote the goods, and he is getting the commission. Suppose consignment process, he is sending 100 quantities but he sold only 80 quantities or 80 quintals or 80 kgs, whatever it may be. If there is an unsold stock is there in the problem, in this situation we need to write down the entry consignment stock account data to consignment account. This is affected in the consignment account credit side. There is no entry in the books of consignee because unsold stock, the consignee is not responsible. In the consignment account, to know the profit and loss, he need to write down each and everything, if whether that is sold or unsold also, he need to mention in the consignment process. The next one, after settlement, after doing of all the process, remittance in final settlement, this final settlement made by the consignee along with the account sales, as we are seeing in the earlier slide also, the pro forma of account sales includes all the expenses incurred, commission from the sales, that all the expenses we need to deduct, and whatever the advances if any paid, that balances also we need to remove, and leftover balance, the final remittance, the consignee or we can call it as agent make the settlement to the owner. In this situation, we need to write down the entry cash or bank or bills receivable account, whether he may receive cash or he may receive check or he may receive the bill also. So, from the consignee, they are getting this. So, cash account or bank account or bills receivable account data to consignor's account. In the books of consignor, we need to write down the entry. In the books of consignee, ultimately consignee is making a payment, that is called as bills payable if any bill is there, or we can call consignor's account data to cash or bank or bills payable account. Then finally, in the consignment, we need to close the account to know the profit or loss. If any profit is receiving in the consignment process, the entry is in the books of consignor, we need to write down. There is no entry in the books of consignor. In the consignee. The entry is consignment account data to profit and loss account. As per nominal account, all the profits must be credited. Then loss is there, the reverse entry we need to pass, that is profit and loss account data to consignment account. Again, there is no entry in the case of consignee. And if in case we need to in the books of consignor, we need to prepare majorly 3 accounts. One is called as consignment account, By using profit or loss, we need to close the account whether the consignment is getting profit or loss. By the above entries, we need to close the consignment account. And the second account is called as consignee account we required to prepare. And final remittance, whatever the remittance which we had discussed, with that we need to close the consignee's account. Third account is called as goods send on consignment account. Goods send on consignment account, for the entry for the close of these goods send on consignment account, whatever the goods is left over, the balances, that must be transferred to trading or purchase account in the books of consignor. The entry is goods sent on consignment account data to trading or purchase account. There is no entry in the case of consignee. And the next, if any adjustments which is given in the consignment, then only we need to take these type of entries, otherwise we need to ignore. In generally, if any abnormal loss is there in the problem, abnormal loss as we discussed due to the negligence in the consignment process, the loss is incurred. So that type of loss is known as abnormal loss. If any abnormal loss is there in the consignment, in the books of consignor, we need to write down the abnormal loss entry, that is abnormal loss account data to consignment account. In the consignment account, that is affected in the credit side, so there is no entry in the books of consignee. And the next entry, in case as we discussed cost price and invoice price, whatever the above journal entries which we discussed related to cost price, if any invoice price is there, invoice price means ultimately more than the cost price if the owner is sending the goods to the agent, we can call it as consignee. In this situation, we need to write down the entry for removing loading in invoice price when the goods send on consignment. Let's say example, actual value 10,000, that is called as cost price. Invoice price is 15,000 rupees. Ultimately 5,000 rupees is the excess amount. That is called as loading. So loading we need to remove with the help of, again we need to cancel that entry. We need to write on the opposite side of the consignment. Let's say 15,000 we are writing in the invoice price in the consignment account, 2 goods sent on consignment at the beginning entry. Then that 5,000 rupees is the excess is there, that we need to show in the credit side of the consignment account by writing the goods sent on consignment account data to consignment account. So that is affected by goods sent on consignment. Within the bracket we need to mention loading the 5,000 rupees. This is in case of invoice price which is there in the problem. And at the same time, if any unsold stock is there, for removing the loading in the consignment stock, unsold stock also, the invoice price is including, at that time we need to write down the one more entry. These two entries specially applicable when the invoice price is taking place in the problem, then only we need to write down the second and third entry which we discussed just now. The entry is consignment account data to consignment stock reserves account. This is in the books of consignor. We need to write down if any invoice price instead of cost price, the consignor sending the goods to the consignee. In that situation, we need to write down these two entries. There is no entry in the books of consignor. So based on the above journal entries, we need to go through the ledger accounts. In the books of consignor, mainly we require to prepare 3 ledger accounts. One is consignment account, number 2 consignee account, and third one goods sent on consignment account. So the first one, consignment account. Let us understand the consignment account. Consignment account is a nominal account. As per the nominal account rule, debit all expenses and losses, credit all incomes and gains, we need to, as per this fundamental rule, we need to prepare this consignment account. This is the format of consignment account. Based on the above journal entries, we need to pass the consignment account. In the debit side, whatever the goods are sending on the basis of consignment, we need to write down in the debit side 2 goods sent on consignment. And already we wrote the second entry related to expenses of consignor. So entry is consignment account data to bank account. So here expenses incurred by the consignor, and promoting of the sales, consignee account data to consignment account. So that is affected income. Sale is a income, we need to take in the credit side. So consignor expenses, consignee expenses, commission, already we passed the journal entries. These all the things we need to take in the debit side as per the based on the journal entry which we discussed in the first slide itself. The first slide shows consignment account data to goods sent on consignment. So based on these journal entry, we need to focus on the ledger account. So, and at the same time we need to consider the entry related to the commission also. Consignment account data to consignee account, whatever the expenses and commission, we need to write down the separate entries to consignee account expenses, to consignee account commission. And at the same time we need to consider if any unsold stock, if any adjustment is there regarding the unsold stock, we need to take in the credit side, because that is unsold, the stock is available after agent promoting the sales, even though he didn't promote this stock, that is leftover stock. So that is taking in the credit side. And already we discussed invoice price. 2 entries again affected in the consignment account. One is if any loading is there, so goods sent on whatever the excess loading which we are taking in the example, if 15,000 is the excess value is there, so ultimately we need to take in the consignment process. And so the entry is by goods sent on consignment account, that is whatever the loading 5,000 rupees in the example we are taking, 5,000 rupees we need to consider in the credit side. Then if any abnormal loss is there, we need to take in the credit side again. So next talk about abnormal loss. As we discussed, abnormal loss, if any there, we need to take in the credit side by abnormal loss account in the consignment account, abnormal loss account data to consignment account. If any, we are sending the goods on invoice price, in the unsold stock, whatever the stock is there in the unsold stock, if invoice price is there, we need to calculate stock reserve. So that stock reserve is affected in the debit side of the consignment account. The entry is consignment stock reserve account, that is called as, if any loading is including in the unsold stock, that is affected in the debit side of consignment account. So this is only if they are given in the problem, then only we need to take invoice price, losses, etc. Otherwise normally we should take goods sent on consignment, expenses of consignor, expenses of consignee, and commission of consignee, that is taking place in the debit side. And in the credit side we need to consider sales, as well as if any unsold stock is there, we need to take. This is in the normal transactions we need to take and evaluate the profit or loss. The consignment account mainly prepared by the consignor to know the profit or loss of the particular consignment, because the consignor appoint the different types of the agents in the different areas. He required to prepare individual consignment account for each agent. He required to prepare, For example, he appointed 3 agents, like he is appointed one person in Delhi, one person in Hyderabad, one person in Bangalore. So 3 consignment accounts he required to prepare, and he need to see whether he is getting profit or loss with the help of the consignment. This is first ledger account in the books of consignment, and the second account is called as consignee's account. Consignee account is a personal account which includes, as we discussed, after sending the goods by the consignor, consignee is giving some advance in the form of surety or bill. That entry we need to show in the credit side, because the entry is bank or bills receivable account debt up to consignee account, that is affected in the credit side. Then we need to take expenses. Expenses incurred by the consignee at the time of unloading of the goods. The entry is consignment account debt up to consignee's account. So that is affected again in the credit side of the consignee's account, because in the consignment we are taking in the debit side, means here that is affected in the credit side, that is opposite side. Then commission. After promoting the sales, consignee get the commission. So if any sales is promoted by the consignee, so ultimately he get the commission, that is taking in the credit side by consignment account. As we know the entry, consignment account debt up to consignee's account. For sales purpose, we need to write down consignee's account debt up to consignment account, that is affected in the debit side. So we need to close the account to evaluate if any final remittance is there. Let's say 10,000 rupees we need to settlement to the owner after giving advances or whatever it may be. So 10,000 rupees agent is required to pay to the owner after final remittance. So that is giving in the form of check, means directly we need to settle that amount. So with this the consignee account is closed. This is regarding the second ledger account. And third one is called as goods sent on consignment account. Goods sent on consignment mainly taking place, the first entry that is called as consignment account debt up to goods sent on consignment account. So that is affected in the credit side by consignment account. If in case any invoice price is there, at that time only one more entry is taking place. Otherwise in the cost price only one entry is taking place. We need to close the account by transferring these balances to trading or purchase account. In case invoice is there, we need to write down one more entry, that is goods sent on consignment account debt up to consignment account. Whatever the excess value we are loaded in the sending the goods, that balance we need to make, because as a owner we know the original price. For that reason again we need to cancel that loading value by writing in the opposite side. So the remaining balance we require to transfer to trading or purchase account. So these 3 ledger accounts we require to prepare in the books of consignor, that is related to consignment account, consignee's account, goods sent on consignment account. In the books of consignee, we require to prepare 2 accounts. Basically one account is mandatory, that is called as consignor's account. Consignor's personal account we require to prepare. So it includes details related to consignee for promoting of the sales, expenses incurred by the consignee, and commission, and whatever the advances if any paid, that values indicating in the consignor's account. So in the consignor's account, this is completely opposite to the consignee's account. By sales we need to take in the by bank, or sales we need to take in the credit side. The entry is bank account debt up to consignor's account, that is affected in the credit side. And here we need to take, in the books of consignee, we need to take these entries related to bank account, bank expenses, commission and bills payable account. This is regarding the values related to consignment account. Next account is called as commission account. Commission basically received by the consignee at the time of promoting of the goods. So this is regarding the commission account. As per the journal entries, we need to write down the commission account. So these are the two ledger accounts we require to prepare in the books of consignee. One is called as consignor's account and second one is called as consignee's account. This is valuation of consignment stock. If any unsold stock is there, we require to add proportionate expenses regarding non-recurring expenses of consignor, consignee we need to add to get the unsold stock of the consignment process. So this is regarding the total process related to the consignment process. So from this lecture we have understood concept of consignment, various terms which we are used in the consignment process, like the difference between the consignment and sales, accounting treatment in the books of consignor and consignee, including journal entries and specimens of ledgers in both the books. We are completed. Hope you understand by watching this video. Thank you.